Good morning, everyone. It is Thursday, the 29th of September, 2016, 8:02 a.m. Chicago time, 9:02 Eastern. This, of course, is another Trader Bite, early nourishment for your trading mind. The goal of these videos, these morning videos, is to get your mind in the game and to share my opinion on what is most likely to happen today. Nothing that I'm sharing is cast in stone or is guaranteed or is a measure of performance in any way. The ultimate reason that we're doing these trader bites is to help those who have not been in a prop environment or a professional environment get ready and follow the same process and build good keystone habits for their daily process. Okay, that's what we're here for. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I want to remind everyone before we get going here, at the end of the video, I'd appreciate it if you hit the um, YouTube icon at the bottom right if you're looking at this on the Stage 5 website, or if you're on YouTube directly, just hit the thumbs up. It helps give me a clout for when new features and new capabilities are released on YouTube by YouTube. As far as what's driving our markets this morning, the key driver right now it remains uh, the crude oil agreement. Many folks have written yesterday and tweeted out, "What's the big deal? They're only dropping production very little." But actually, this is a much bigger um, much bigger effect on crude because the market was betting that they may come to an agreement, but there are some big bets on the idea that they will probably never come to an agreement. It's not the amount that they're reducing supply by and capping supply on. It is about the fact that they've reached an agreement. And the next step for this agreement is to reach out for non-OPEC countries to also limit supply. So this is a successful first step for crude supplies to start being taken out of the market. And so this is why you saw the tremendous reaction yesterday in crude. So it's not something that we should discount. The other thing is, of course, the numbers that came out in the overnight session. Not only the U.S. numbers, but also the German employment numbers came in much worse. Unemployment change came in at 1,000 plus 1,000, with the expectation of actually negative 5,000. Failed to improve for the first time in 6 months. Unemployment claims at 6.1%. So that was not expected. We saw a reaction in Europe when that came through. The business climate indicator was stronger than expected. Consumer confidence was in line. I'm not going to go through the news with you, but these are things that are driving the market. And of course, about a half hour ago at 7:30 Central, we got initial claims which were stronger, GDP which was slightly stronger, personal consumption which was a little bit off, wholesale inventories which was weaker, final GDP price index came in line, and goods trade balance came in a little bit better at negative 58.4 billion versus negative 62. Again, not trying to go over the news, but these are important factors here. And of course, we had Fed's George commenting, who's a hawk and a dissenting voter, saying the job market is showing continued momentum. This was on CNBC, and he believes that politics is not a factor for the Fed. Inflation is not far off from where it should be, and the market is pricing in, according to Fed fund rate futures, the market is pricing in a 54% probability of a Fed change in December. This is higher than the prior, than what was expected at the last FOMC meeting. This is following on Janet Yellen's testimony yesterday. As far as what we're expecting today, the key driver today was the GDP release and the core PCE. But ahead of us, we still have pending home sales at 9 and natural gas. And of course, don't forget, today is the day we have the massive parade of ECB speakers. I mean, from the overnight session, from yesterday's session or the beginning of today's session, in the futures, starting with 8 p.m. Eastern. Yesterday we had Fed's George. This morning at 3 a.m. Eastern, we had ECB Speaker Jasbeck. Then at 4 we had Lycanen. At 5 we had Harker. At 5 we also had Prate. And then at 8 Eastern this morning we had BOE Speaker Forbes, who's a hawk. At 8:50 Eastern this morning, we had Fed Speaker Lockhart. We were looking for Fed Speaker Powell, who's a voter in the middle. At 10 Eastern, 9 Central, we're looking for ECB Speaker Constancio at the same time. And then we're looking for Fed Speaker Kashkari at 2 Eastern, 1 Central. And then again, Janet Yellen, Fed Chair Janet Yellen at 4 Eastern, 3 Central this afternoon. Okay, so a lot of fundamental data and influence pushing the markets around, which is also leading in some interesting movements in the treasuries, which have been rising yields, going lower, which have risen and yields were going lower, and now they're reversing slightly. So let's get to it. Here's what was expected yesterday. We opened just slightly out of above the prior day's range, above Tuesday's range, and the primary expectation is the market is likely to rotate down as shown here. And the key number that I was watching yesterday was 48.50, which was sliced right through like a hot knife through butter. But the main theme was for a rally and a pushback through to this 2-day balance up here. And the goal yesterday, as you see it with the tip of this arrow, wow, that is a terrible arrow. With the tip of the arrow here, the goal was 2165 and a quarter, 2166. So that was the primary hypothesis, that we dip into the prior day's range, hold the high volume node at the top, and then find our buyers and bounce up. So did that happen or did it not? On the second hypothesis, the expectation is an open auction push up, find sellers near the 58.50 point of control, again on this 2-day balance. Very important, these 2 days here right now. Very, very important for what's going on. I'll discuss that in a minute. And then the expectation is for this to fall down and into the overnight low and down into the 46, 47 area, actually. That's what I was looking for yesterday. So the main driver for Hypo 2 was a test up to find sellers and push down as part of that auction. So what happened yesterday? If anybody's seen the movie Back to School, we had a triple Lindy yesterday. Something the market does every once in a while. What we see, my opening swing is in the wrong place here because I keep flip-flopping computers. What we see is an open auction, and then the market starts to rotate down into the prior day's range. So we have a nice little bounce. So here's your test of the point of control by 1 tick. Again, this is not to keep pushing this volume profiling idea. And why I switched to it in 2005 and why I've been developing the volume profile method of approach to the market. But we see this a lot. We see the market hitting these high volume nodes. Volume speaks in volumes. Volume speaks in a very direct way. It tells us how accepted or rejected price is. So price alone, looking at a bar chart of prices alone does not give us the full picture, in my opinion, and you should be seeing that if you're following this, if you've been following along for some time, you should be seeing the same thing. Price that is confirmed with volume, not with a volume bar like here's a lot of volume that occurred within this bar, but where, at what prices did the market come in, with high volume, and what prices did it reject by not having any transactions take place, and that's what we're measuring. We pull back to the mid right out of the prior day's range for the continuation move, and this continuation move was a lot farther than I actually expected. I expected the continuation to push through the low volume node, the 4850, pull back, higher low, start pushing back out, and then start to move. That was hypo one, right? So hypo one here was okay, in control. Hypo one's playing out until it started to push through, and then I started to look at hypo two. So yesterday, what we had is basically a push. We never had the push up, so we had a push down, which was hypo one plus two. And then when we started to push through the 4850 and we got this pullback and continuation, now this became hypo 2. Once we started basing and turning around, now we're back to hypo 1, and then the target that it hit was absolutely hypo 1. You could see here the July high is 65 and a quarter. The high of day is 65 and a quarter. That was the target on the arrow shown on hypo 1. So we went back to hypo 1 later on, and the rotations became very trend style. So if I drew a profile from the low to the high here and looked at the low as if it's the open, we very much have a profile that is trending to the upside and finally finding, and then price finally finding balance, finally finding some selling pressure and balancing out up here where we see the high volume node forming and the point of control shifting up on the afternoon profile. Of course, part of this was um, the OPEC stuff, and also the comments from Janet Yellen. So the expectation based on the way we finished neutral extreme to the upside, and what this is likely to do is continue what I talked about last Friday, and I mentioned when was it, Tuesday and yesterday. This completes that whole idea that we're likely to pull back on the weekly. So let's take a look at that for a second. Here's the weekly, and if you remember, I drew this, the fact that we pushed to the higher end of the profile from a lower end with a low volume node stuck in here. That's a terrible box. And the idea, what I drew last Friday, is it's likely to pull back before it comes back, retests the 74 quarter, and starts pushing to new all-time highs once it takes out the 74 quarter on the retest. And I'm still looking for that plan. The market has shown that it has dropped and was able to find buyers at lower prices. It has retested the ranges below this balance and has found buyers. So the next step, the next natural rotation, and it doesn't happen all in a linear fashion. Nothing ever does in the market. The next step is to retest a weaker structure below, balance out, and then start to move back into the prior balance because the lower balance was rejected. Okay, this is the normal process of the auction. I want to emphasize how that works so that you don't lose yourself in the minutia or in the noise. Here's the overnight session. The overnight session was pretty light last night. I started looking at the market this morning when this bar started happening. I was watching it on the S5 book map, and I saw the bids getting hit and hit and hit and hit. Some pretty decent selling there ahead of the GDP and jobs release. Or the unemployment claims release, and the market was rotating back through. And look at where the low is. Look at where it found a bounce. It found a bounce in this key low volume node right here at the 57.50 on the nose. This was our first, the 57 quarter was our first test up before the market dropped yesterday, and we've pulled back to it. So we did what was expected on a neutral extreme. We reopened, tested higher. We continued our auction overnight, and then now we're rotating back down, and we're pushing towards the low volume node and the middle distribution there. We expect the market to be stuck here in the overnight session if it does not develop higher, and that's what it's done. Here's the bulk of the volume on the overnight session, with 62.50 being the point of control. We're trading underneath it. This looks to me like it's pulling back for another run for a continuation. This is an impulsive move down, and we're still looking for the continuation lower. So I expect this 57.50 to be pushed a little bit further down before buyers are found. Okay. So I'm running out of time here, or I've actually already run out of time. So we're opening in the upper distribution. Here are the three distributions yesterday, actually four. We're opening in the upper distribution. The expectation on the open is an open auction. There's really no value. So you see the gray area is supposed to be the value area. There's really no value yesterday, as there wasn't on a Tuesday, because both days were trend days. Trend days, by definition, we don't trend if there's value. Value means we are balancing and accepting prices in a range. So the expectation is for an open auction. I'm looking for the market to continue to move down, push lower. By the way, this gap zone here is going to disappear if you're using flex levels. And then I'm looking for this to base and then start to move back up. I'm looking for yesterday's high to be tackled, and then I'm looking for a push to 21.70 and a quarter next. Now that we've finished testing the 65 and a quarter, that's your hypo one for today. Okay, and of course, as always, the second hypo, because we are in a sandwich here. The second hypo is for an open auction, test higher, attempt to hold these prices, and then find sellers and then start moving down back into the 54.50 or the 54 even, and then move towards 48.50 to take back a lot of the gains yesterday before we later balance out and then start rotating back up. To rotate back through the highs, especially to push through to 72, 75, and 74, and so on, the market needs a good base. And with these runs, with these quick runs up, we don't have that. So why do I say we don't have that? All I have to do is throw a profile on here. So these 2 days are very important. This profile is very important here. We keep these 2 days are essentially delineating the lower distribution from the upper distribution. And then we have a secondary profile that we draw for everything that's happened this week here, and we can see that that we do have some overlap. The overlap is basically almost the same as what we had last Friday, and the market is likely to test down into this area here before it finds a base for higher, and that was again the primary hypothesis. Okay, I'll cut it off there. Hopefully this makes sense to you, or is at least starting to make sense to you, as far as what the auction is likely to do and how I'm developing the idea for the day, and then later taking that idea through execution, which is covered in webinar 5 on futurestrader71.com. I'll catch you tomorrow. Stage 5 traders, we have our webinar today at noon Central. The invitations are going out shortly. Take care.